let me invite the panelists over to kind of come in and sit down. We're going to talk a bit more about crypto and what some of the problems are within the space. Well, to a very intimate panel. I'm actually going to just let each of the attendees introduce themselves. Like I said, we've got a really wide breadth here from academia, industry, and also from the regulatory side. So I'm going to start off. Do we have a mic?
Yeah.
I'm going to hand it over. Which one?
Yeah, just hold it.
Like this. This is 1, 2.
That's me.
You? Oh, yeah, it's muted. It's like 2020.
Cool. So that's what we want to take us off.
The introduction.
Please do.
That's a hard one. I'm a professor in entrepreneurship, innovation and frontier technology, but there's some common threads that have probably gone through my career of nearly 40 years. That's giving away how I am. And that is technology and education. So key to the presentation we had before, we can't have innovation, we can't have entrepreneurship without those two things. We have to have technology, we have to have education. Crypto, that's sort of, I sort of fell into that because I was looking for a piece of technology many years ago around compliance. I wanted something that would support business and keep them compliant, but at the same time not allow anything bad to happen to people who work for them, and that's sort of really how I fell into crypto. And I fell into crypto in just by looking for that technology. I didn't really realise that's what I was looking for, and that's what it was. So that's how I fell into the crypto world and just been immersed in it ever since, and it's now a passion for enjoying.
Perfect. Up next.
Yeah, hey everyone, I'm Avinash. I'm one of the co-founders and Chief Product Officer at Fiat Republic. So we've built a banking as a service platform. Probably there was referring to one of these kind of platforms before that aims at bridging Web3 and the TradFi, so the traditional finance world. So our platform effectively provides fiat infrastructure to crypto platforms. You know, as we've learned, crypto platforms traditionally, they're very new, banks don't really like them so much, and they struggle to get access to banking and payment systems. But this is very, very crucial for crypto platforms in order to be able to actually run their business, in order for them to be able to collect payments from their users, and that's where we step in. Our goal is to become the only API that a crypto platform needs.
Next.
Hi. I'm not sure. Yeah, sure. Okay. Hi, I'm Sevinc. I'm regulatory counsel to Wirex. Wirex is a payment platform that combines both crypto and fiat payments and allows users to use crypto for their daily purchases. Essentially, even for a coffee or a quick bill, you can buy through Wirex card. And you can use your Ethereum, Bitcoin, or any other crypto assets to make this purchase. Personally, I've been working on regulatory side for over 5 years. I recently worked on advisory positions and advised banks in insurance companies before moving into payment and the crypto sector. And last 3 years, crypto and e-money payments around, especially around UK and EEA, has been my focus. And I've been advising to the voice companies on regulatory horizon scanning and how to be compliant with the regulations. Yeah, this is pretty much what I have been doing.
Not at all. Okay, my name is Mauricio. Is this me? Yes. Okay. I'm going to sit here. I work for Metaverse as a global director for cryptocurrencies, global strategy director. My role is to advise clients on how to adopt cryptocurrencies in their business models, largely trying to shine, I guess, in my role. And mostly do banks, fintechs, and regulators. Is this a mustache? I guess. Okay, is it good? Okay, thank you. And I've been in financial services for over 20 years, in crypto for around 6 years, which kind of makes me old in crypto days, I guess. And it's a never-ending learning path because there's so much happening every day that I just keep learning and working with clients and learning more and trying to find that base of adoption in financial services mostly, but also in music and IP and other industries where I advise smaller startups.
Perfect, thank you. So a bit of general housekeeping because the tech issues seem to be quite prevalent. If you can mute yourselves when you're not talking, that will probably save the audience some of their errors. So let's kick off. I guess maybe let's start right at the beginning and maybe talk about, why do cryptocurrencies even exist? What really is like the purpose of them? Maybe Lisa, this is one for you.
Yeah, I think it's an important one, and I don't think many people actually do understand because of the misinformation that's out there. But cryptocurrencies, and the one that we know the most, and it's not necessarily that it's the best, but it's the biggest and the oldest, is Bitcoin. Cryptocurrencies came around as a result of a lack of institutional trust. So there is actually a measure of trust. It's the Trust Edelman's, the Edelman's Trust Barometer. And in 2008, and some of you may or may not remember, but the global financial crisis was an actual stage in the economy where the very vast majorities of people like yourselves and business did not trust institutional organisations, governments, banks and so forth. And so it came about as a result of a lack of trust to create a technology and an environment where we could actually be trustless, and that sounds ironic when you're talking about a lack of trust. And so that's really where cryptocurrency came around. It didn't come around as a reason for money laundering and criminal purposes. It came around because somebody who had an innovative idea realised and recognised that the very institutions they didn't trust, we could eliminate using technology. And that's the foundations of where we're at. We're actually at that stage also again right now. So we're at the precipice of this, increased use case and deployment and so forth. That's really where it came about, and that's the basis of it.
I feel like it very much started out as this kind of concept, this ideal which people really wanted to strive for, but as with most concepts or things which don't exist in reality, as you're trying to bring them in, you do suffer from trying to make them real. And at the moment, if you look at the classification of crypto, I mean, that could be an asset, it could be a saving. Jan, what's your view on maybe the issues of the classification and crypto?
I think it's been over a decade that crypto is in our lives, and this question hasn't been answered or clarified all over the world. If you ask this question in the US, you get a different answer. If you ask this question in Hong Kong, you get a different response. And I think it is probably the biggest tackle around crypto regulation and adoption in terms of, especially from a consumer perspective. Maybe not B2B, but because all regulators, they're focusing on consumer protection and identifying and describing crypto is the key. We see some companies looking to regulatory tackles because in some jurisdictions it's described as security. And on the other hand, there are some jurisdictions they just see crypto, they don't see crypto or crypto trade any different than stock exchange or just selling stocks. And so there are all different descriptions, and this is essentially defining how company or regulator is looking into that I think the recent draft regulation in EU, in MiCA, I think this could be a good example or good gateway to have a unified approach, because we have seen similar approach on payment services or e-money. European Union legislation was able to drive e-money or some kind of fintech descriptions into a unified approach. And we see, for example, when you talk about e-money, we almost talk about the same thing in APAC and Europe. And I think we're not very far away from that in terms of crypto, especially after 1 2 years when European Union has this unified legislation. We will probably have a chance to see a unified approach, and this is also my expectation to make daily lives of regulators easier.
So I love the idea about like a unified approach, and I think we'll probably come on to maybe the question after this will be around that difference between a borderless concept and regional regulations, and we'll probably give it to some people. But in order to really, I guess, kind of drive this forward, it sounds like regulation is one arm, but you need like a network of different people to be working on progressing crypto. And I think we've seen some of these platforms work quite well. If you look at Visa, MasterCard, they managed to kind of use a specific network to be able to drive a platform which now kind of serves for their industry. Avinash, like, what do you think are the other partners required to be able to kind of really drive crypto forwards?
Yeah, so I think Visa and MasterCard are very good examples in the track that I would, right? Because as Lisa was alluded to before, I mean, one of the biggest reasons why sort of crypto came around was because this lack of trust, right? But in traditional institutions, when crypto is supposed to bring that trust back, right, into sort of this new ecosystem. And back in the day, what Visa and MasterCard was doing was exactly that. They were introducing trust to the ecosystem because, you know, they were the ones who were taking on the credit risk, basically, in fact, your settlement risk, rather, right? You walk into a shop, you know, you swipe your card and you walk away with the goods, right? But at that point, that shopkeeper or the merchant hasn't actually received their money, right? So behind the scenes, that is one of the primary roles actually that Visa and MasterCard are playing. They're the ones who are guaranteeing that transaction, right? So they're basically the ones who are effectively telling the merchant that you're going to be good for the money, right? You will get the money. That's the kind of role that they're playing. So similarly, I think there is a need for somebody like that in the new world as well, in Web3 as well. And I think at Fiat Republic, we're kind of trying to do that by effectively building a bridge between Web3, between crypto, right, and TradFi between the banks, right? So I mean, we're in a sort of this unique position where, you know, we're working with crypto platforms who are desperate buyers of let's say, banking services, and banks on the other side who are unwilling suppliers, right? And we're basically this bridge in the middle that's trying to connect the two by making sure that there's seamless exchange of data, right? The reason why banks are quite, let's say, untrusting today of crypto, right, or supporting crypto transactions is because they don't quite understand, for example, what the source of funds is, right, or where exactly is the transaction coming. A large part of the, let's say, transaction chain happening on the blockchain, and the bank only sees the last leg, which is, let's say, the fiat off-ramping or the fiat on-ramping part of it, right? Nothing else. And that's what makes them scared. That's what kind of, let's say, makes this bridge a bit foggy, right, dealing with the bridge metaphor. So what we're trying to do is build this platform that will make it easy for number one banks to actually get access to a lot of this data involved in the transactions that are happening right now, not just for the fiat leg of it, but also the on-chain side of things. And you know, the new sort of regulation, Magaldi travel rule that's coming, that only sort of goes to show how important this is, right? And ultimately helping you know, to level up compliance standards in the industry, right? Again, one of the other reasons why banks are quite scared to enter this world or to properly service this world is because they think you know, crypto is sort of rife with lack of any compliance standards. You know, there's a lot of platforms who aren't very good at that, but then there are good ones as well. And the job that Fiat Republic is trying to play is to build this consortium of crypto platforms where not only do we, you know, want to support players who already are sort of on top of their compliance game, but at the same time almost act as a, you know, advisory service where newer companies who want to launch in this space, we can educate them. If they went to a bank directly, the bank would just turn them away, right? They have no idea what you're talking about. But with our approach is to kind of tell them what they need to do in order to bring their compliance levels up to a certain standard so that they can help their customers and their users participate in the crypto economy overall, right? Because ultimately, the starting point of today, at least, right? The starting point is always a fiat owner, right? So you will always kind of need that for users to be able to participate in the crypto economy. Yes, there's, if you're mining crypto correctly, etc., that's different. But then for the layman, you always start with fiat, and therefore the need for this bridge, this compliant bridge, is really necessary. And that's why I think we're very analogous to kind of the Visa Mastercard example, and that's the role we're trying to play in the ecosystem.
Great. And I was going to say there was somebody on this panel who's mentioned before, I don't think all frameworks apply to new paradigms. Mauricio, maybe do you want to add up?
Yeah, I've been repeating that for the last 12 months, that old frameworks will not apply to new paradigms, and crypto proposes the decentralized paradigm, right? It's an infrastructure that banks or regulators do not control. So to play with the infrastructure, they will be in the infrastructure. So the provocation to regulators is largely be on chain, join this infrastructure, because that's where we're going to be playing. And by regulating from the sidelines, this is, my voice is too loud. Can we,
You guys hear me if I scream like this? Okay, yeah. We're not recording, are we? From the microphone?
No.
Okay, so, yeah. Much better, right? Okay, good. Sorry.
Let's just have a conversation. Let's
yeah,
just
sorry.
Yeah.
So, I can't use my hands. Look at that. So the claim is, if you're regulating off-chain, which can be done, and it's been done forever, you can only go so far. There's a lot of activity on-chain. There's a lot of data on-chain that can serve to multiple purposes, either to know what's being done for AML purposes, or even to predict if fraud is going to happen, or even to trace if fraud has happened. So I think there's a lot of benefits from regulators, not only for them to use the blockchain or the blockchains as we have. Now we're way too many, come on, right? Who needs a level 1 blockchain anymore? But yeah, I think that's one upside to regulators, is that if they are on-chain, they're using the data to the benefit, and even to maybe prevent systemic risk, like we had in 2008. We did an exercise the other day with a client, and the provocation was, would that happen if CDSs would be traded on-chain? Probably not. The timeliness of information would be so much better that we would be able to prevent some of those drastic changes. A client said, well, Luna Terra happened. Yeah, it's all in the smart contract. If you read the smart contract, you'd have prevented that. So I think that is a very powerful proposition of blockchains for regulators. And the second one is, do you want to regulate how, say, DeFi happens, or how banks use the blockchain, for instance? Write an SDK, a software development kit, and tell them what you want them to do and how you want that done. So that now you're playing with the industry. And as we evolve towards that direction, what's going to happen is that the technology is going to fade to the background. And then the user journey that you mentioned is going to be much more transparent. And then the technology is going to play the role that it has to play, which is a transactional data infrastructure that we don't want to talk about. I would love in 5 years to not be able to talk about blockchain anymore, because nobody cares.
And yeah, I really hope it goes the same way. Like, I remember back in Accenture, we used to have like a cloud strategy practice, right? And that eventually just became strategy, right? It's just how we kind of do things. And I guess in the same way,
yes,
we kind of hope that that adoption will also happen within this space. But going back maybe to this unification point, and in particular, this idea is borderless. And yet, we have that which is being, I guess, contrasted with, say, a currency that is meant to be internationally traded and yet is kind of regionally regulated. Professor, do you want to maybe expand a bit about this disconnect?
Yeah, actually, it's really interesting. I'm going to talk to. It's easier. I've come today from a whole workshop on digital trade and the use of digital currencies and digital assets and tokenisation is the way forward. We are in a pervasively digital world. It's borderless because, you know, the last 2 years, for example, we've all known that there's no border around the work that we do, the transactions that we make, the businesses we engage with, how we pay, who owns those transactions and who owns goods and all those sort of things. It's international. And yet the traditional systems put boundaries around them. And if I give an example, and I just love the fact that Kano and I had a discussion about Wirex, I'll give you an example. When I was stuck in Australia, I've been an advocate of Wirex since day one. And all my banking was with Wirex in Australia because that's what was available to me in Australia. I arrive at Heathrow and find out the FCA has got me geo-blocked. My accounts are Australian, but I physically could not on-ramp Fiat to my Australian Wirex account. That is just insane in a world that we're in now. And so the conversation we had today about digital currencies involved in digital trade, we will not advance and engage the 96% of the economy unless we have a seamless way of those businesses being able to engage. And we've all agreed, and it was, you know, the Law Commission and everyone, it will be digital currencies and cryptocurrencies, whether it be NFTs, whatever the framework is. And everybody that knows me knows that when I talk about digital assets, it includes cryptocurrencies, NFTs, and the full spectrum of digital assets. It will not happen without it. We are borderless, but we are not behaving that way. And we have to change our thinking from it being very regionally regulated to the fact that it is international. We need to have a standardised international regulatory authority around digital assets and cryptocurrencies. You can't have the FCA geo-blocking a perfectly amazing application just because I've arrived in the UK. When if I go to Europe, it works. It's just insane. It's insanity. And so that, and again, it's come out of, you know, massive conversation, is that 80% of trade transactions, by the way, runs under UK law. So if 80% of the world's transactions are running under the UK law, then why aren't we creating a standardised system? And we're not. And so we're a long way from that conversation. But I should say that's not the fault of digital currencies and blockchain. That's our problem. It's not the technology's problem. That's just our adoption, and our conversations are not blunt enough with the decision makers. There's only 3% of them have skills in our field.
So do we think it's kind of strange that we're going by the rules of trade from a country where, say, you know, we could be trading with a different part of the world which might have nothing to do with, say, the UK or a particular kind of region? And particularly, I think, within the developing world, I think we've seen a lot of adoption for this kind of new cryptocurrency and blockchain is coming up. And I think particularly within South America, there's a lot of good activity. I mean, Mauricio, I mean, from the Brazilian perspective, I mean, have you seen this?
So I think emerging markets have a bigger trust issue with standard banking players because there's, you know, traditionally a lot of corruption involved, and there's always shady players in the industry that are backed by the regulators. So in poorer economies, it's much more interesting if you can go to the side and play with crypto and, you know, be your own bank because you don't trust the bank you have available. So that's why we're seeing an uptake on crypto adoption in those countries, both at the retail level and also at the merchant level. So it's much easier, say, in Argentina to go and pay something with Ether, the Ethereum cryptocurrency, than it is to kind of, you know, wait for your card to clear. And, you know, sometimes you don't even have access to a card because nobody, you know, wants to give you a card because you're sub-employed. So it's much easier for those economies to have the adoption of something that is open, permissionless. Anyone can set up, you know, a wallet, and off you go, and you're doing your own business. So I think there is an incentive, even if it's not designed for it, to allow for those players to actually go and do that, which is kind of gives way to some interesting stories. Vitalik Buterin, one of the co-founders of Ethereum, was in Argentina late last year, and he was being recognized on the street by taxi drivers, waiters, you know, street salespersons, and it's incredible that he's such a figure that takes, you know, I think it was Naval that called him the crypto politician, which he kind of now is. But the thing is, these people are in their day-to-day. I mean, you spoke about the killer app, right? For some of these economies, that's the only way people is transacting now is through crypto. And that's because of the conditions. Now we come to the developer world, and we're seeing these types of constraints from regulators. You know what, if we keep doing that and preventing adoption, we were talking before, right? The MAS in Singapore said that, you know, I mean, there's no point in banning retail crypto because it happens anyway. So if it happens anyway, well, that means that we're solving real problems regardless of what the regulators are doing. So my provocation, again, back to, you know, be on chain, is participate on it. You know, let's make this more even, more equal, more accessible to everyone. And if the banks aren't willing to play that part, you know what? People kind of figure out that they don't need them. So let's, you know, if the banks are to help adoption at any point, it will be, you know, removing a layer of abstraction and helping people who are not that savvy to actually adopt that. So I think we're getting there. I think that the discussions are on the right path, maybe not fast enough, but we're getting there.
I think just on that point, just finish on that point, which is a profound thing that came out today, the Law Commission and also the Marshal of the Rolls, Jeffrey Voss, they have all determined there are very few changes required to our current regulatory and legal framework. What we don't need more punitive and regulatory control, what we need is more enablers. So that's one of the things the electronic trading document and act is about to do. The punitive and the regulatory stuff exists. What we don't have is enough enablers to enable the new digital world to function as it should. And so they've actually recognised there's very few tweaks needed in the regulatory world. Same
product, same rules, right? So I think, correct. You know, if there's some form of nuance that we're running on crypto rails, let's tackle the nuance, but let's not kill an industry, right? I mean, even the internet, we were talking about the early days of internet, there was regulation in place to enable that. It didn't come out of, you know, it wasn't nature. It was a bill in the US in the first place, and then everyone followed suit. But the thing is, it's required. It's, you know, not everyone needs to be a degen, like DeFi degen, to play with this. I mean, we need to be, you know, more open and be more, you know, accessible to everyone.
And I guess there is this point where, you know, as much as we might want to rebuild the financial system in our own image in a completely limitless way, we also have the financial system and the regulation system that we kind of loathe and love at the same time. What do you reckon companies can do to be able to accelerate that?
I mean, I think for the regulatory journey, we have seen different approaches. Like maybe going back to the topic that Mauricio also mentioned, that we have seen like complete bans, we have seen some faster adoptions, and maybe a particular example, we were dealing with one license application and local lawyers advised us to bring the capital to crypto rather than Swift or international payment. They said that it's going to be very easier because it was the Argentina, I guess, they said it is going to take very, very long if you to try to do that through like this Argentine bank. So I think there are various reasons that might motivate some countries into different regulations, like complete bans, being more open, also leveraging probably their experience into some contribution to their economy. And I think like one of the indicators is that companies or countries' economic situation, and also for companies who are trying to accelerate this. I think one of the important aspects is that companies can move everywhere. So we are talking about the borderless technology. So companies, when they don't have regulation, they go somewhere else. So there's something called doing by way of business. So if you're doing these activities by way of business in the UK, okay, you have to be regulated in the UK. But I think most of the companies or most of the jurisdictions, there is a risk that you might lose the enablers if you just overcomplicate your regulations or if you don't act practical. So what I've
seen so far, for example, like Singapore, Dubai, or some other jurisdictions, they're trying to leverage, they're trying to be innovative in terms of regulation in order to bring enablers into their jurisdiction. But in terms of UK, I think the UK has a very good history and actually experience in regulating complex financial services and complex financial instruments. So and FCA and UK regulation has been always principle-based. So from a practical point of view, I think UK can utilize this experience and also reputability into leading crypto regulation, and this is the main expectation, I think, from my end, and for companies to also follow.
Can I just add to that a little bit? There's a reason why this industry, financial services, is this old. We learned with the mistakes, right? There were lots of regulations that came after massive crashes and frauds. You know, you talk about Ponzi scheme. Well, there's rules for that because there was a Ponzi scheme once, and we learned from it. So it's cheaper to learn from someone else's mistake. And if this is going to be a new industry, we might as well learn from the industry that preceded us to avoid falling into the same traps. Crypto moves at a much bigger pace than traditional finance these days, and even fintech. So we need to learn as fast or faster to become a serious industry. I mean, I don't want to be the adult in the room, but maybe we do need the adult in the room, right?
You're exactly. I mean, we've seen Celsius, and then 1 month later, New York regulator just coming with the liquidity rules. So we learn from the mistakes. This is how it happens. This is how our journey goes, and we are probably not even in the middle of it. So we will. This is going to be a good journey.
I do enjoy how you got the practitioners and theorists just talking, and then over like the mic comes the voice of the regulator. I'm actually going to open up maybe to any of the floor in case you guys have any questions, which we can kind of divert to the panel while you're here, and if not, we'll just kind of continue for another couple of rounds. Yes.
I work in a bank, but I also at the European Commission EU financial data space, and if I may say, so you mentioned that I think there is a little bit of skepticism about the regulation. The regulators, in fact, they really try to enable that, but they don't know how. And in this expert group, we really recommend use case approach basis. So my question to you, so you know, there is the digital ledger technology pilot regime. I don't know if you heard about that. It will be in effect in March 2023, DLT pilot regime. That's a new way to do regulation, because the problem here is that the regulator want to enable that, but because it's moving, they don't know how to limit the risk, but at the same time enable it. So that the way to do it, we really recommend that, is through sandbox, through testing, through use cases. It's not because you give access to, you say, give access to the blockchain. Okay, for example, in the DLT pilot regime, where you have, for example, security token and whatever, you know, it's a pilot, yeah. There is an exemption where you can not report anymore. You don't do any reporting anymore if you give access to the regulator directly to the blockchain. Do you really think that is sufficient, in fact? If there is no dialogue with the industry, it's not going to work. And the regulators are really asking for, you know, it's not antagonism, it's not punishment, it's how to enable it, but efficiently, because there are risks. There are risks, but they don't know, so you are conservative when there are risks. So there is a BCBS consultation, for example, for risk assets, you know. Bitcoin is the largest weight, you know, 1,250%, because when you don't know, you want to be conservative. So the way to do it is to prove that it is safe, that you have several types of assets. They are talking about, oh, we don't know the classification, whatever. You have something underway, and you just need they are opening the door. They are doing pilot regulation. It's going to be reassessed every year. So go to the sandbox that are open everywhere in the world for that to that's all.
So I can feel that. First, I love sandboxes. I think it's the smartest way for industries and regulators to collaborate in a kind of controlled environment. We've seen a lot of great stuff coming out of sandboxes everywhere in the world, and I think that is probably the fastest way to learn when you're actually doing things, right? So I think that's one. The second thing is when I say get on chain, that is 100% collaboration. There's no expectation that any regulator is going to just wake up one day and know everything about a blockchain or a cryptocurrency. They have to take part in the industry. I think that's the second thing. And the third thing, I think, as much as the profile, I love the shine, by the way, I'm going to steal it blatantly. The same way entrepreneurs and the industry is going to have to reshape themselves to this new economy, regulators will too. The same skills that are necessary today will remain. There's a whole lot of other skills that the regulators are going to have to develop. So when I say that I would expect a regulator to provide an SDK or a software development kit for, say, DeFi lending, a simple example. You want to build a regulated DeFi protocol, here's your software development kit, because it embeds the rules that you have to abide to when you're running your business. That is a different type of regulator. That's a different set of skills. I would expect a division of engineering in a regulator to actually build and roll that out. That would be the greatest approach to this. And then when that happens, technology fades to the background. And we're talking use cases, we're talking data, we're talking disclosure, we're talking massive analytics that this new infrastructure now allows. So I love the point, and it's exactly where regulators need to go. It's not going to be from overnight, and I hope it doesn't, because then I'm going to be suspicious. But it has to be in place, and I think the whole new way of regulating with the DLT is the right path forward. It needs to be broader. It needs to be global. It needs to be integrated. And of all people, the IMF published a paper this week where they're actually rallying for that to happen. And if it comes from the IMF, it's a global entity. It's a perfect timing.
If I can add to that, I think, and this is to pick up on your point, I think the sandboxes are not about testing the technology, it's about the business models.
Yeah.
Because the technology we keep using this terminology that the technology is nascent and it's experimental. It's not. It's found models, the killer apps, that's what we're testing. And we have to be, as an industry, 100% clear in what we are saying. And we do have to hold regulators accountable because they're making some really wild decisions. So there was also some conversations that, for example, the head of the Centre for Digital Technology and Innovation is in fact the head of technology for HMRC. Now we all go, when we talk about the tax office, Australian tax office, the ATO, the Australian Taxation Office is equally as bad. They are wanting to shift their position from being regulatory and punitive to be enabling and supportive. Now you might not all think that, but he is the one that's leading the innovation in this space. And so there has to be a shift away from being called regulators if we are going to enable. And that's a very different conversation than sandboxes about regulators. We don't need sandboxes for regulations because we know that the regulations exist, we know that the legislation exists, but we do need to test business models, what will work and who can be included in that. That's important.
Perfect. We're going to take one last question and then we're going to move on at the back.
Wendy, so I work for an investment bank at the moment. I work in the implementing regulatory space generally. And so what you found over the last 10 years since 13 years since, 15 years now since the financial crisis, is that regulators have taken a while to implement the regulation today to regulate derivative markets at all, right? And to understand the products. And so while at the moment we're talking about, great, we need them to get SDKs and we need them to get more advanced. Realistically, I think that's a while off, right? And so I think, so my question is that, are firms in the crypto space ready for the impending tide of basically general, normal legislation, regulation that happens today? And the cost of compliance is huge, right? For an individual investment bank, generally, on per year, it goes into the tens of billions. right? Effectively that you're spending. And this hasn't really happened to crypto funds yet. Realistically, that is going to happen because regulators will write legislation, they'll write regulation in words, they won't do it in code, and ultimately you're going to have to spend money to hire people like me ultimately to then translate that regulation and then like tie it up. So I've got a job for a while, but like tie it up into like where the regulation's going to go. And I think one of the things we found, so I guess like A, our firm's ready for that cost of compliance, right? And then B, I think the bit that we found the most impactful, and it's taken many years, right, to get to that space, is kind of what we're doing with sandboxing, but then getting ahead and saying this is what we're doing. But yeah.
Who wants to take that?
Do you want to take that?
I can start off. Like I can start off. Yeah, I think 100% the firms who are serious, right? The big ones, they're already self-regulating to a certain extent. You know, you take your Coinbases and your Bitpandas and Bitstamps, right? These large exchanges, centralized exchanges, they are self-regulating, right? So because they understand that if they want to be able to serve a mass market, if they want to be in the good eyes of the regulator, right? I mean, regardless of where the regulation stands, they have to work hand in hand with the regulator, right? So I think firms are ready to take on that cost. I think the problem is that at the moment there is not enough clarity, right? That's where they kind of stumble upon sort of where exactly should we divert those compliance resources? What exactly, you know, sort of is the legal help we should be hiring over here, right? So I think once that regulation sort of evolves and becomes a lot more clear, 100%, right? Because that's then going to become the only way to be able to stay in business. Because then, you know, once that regulation steps in, if you want to be able to continue operating, you have to spend that resource. So then that will eventually, I think, you know, lead to further innovation in the business model itself, right? Because all of a sudden now, when you've got this major sort of cost center that you have to cover as well, no longer can you have like shoddy sort of unstable business models, because you need to make sure that you are making enough money to be able to cover that cost as well, right? So I think it's going to happen, definitely.
Yeah, maybe I can add to that. Is a regulatory council of a company backed by also investment banking companies. Compliance costs are not very low. You have to have you know, high standards in terms of compliance in order to make companies that are providing you banking infrastructure happy, in order to make Fiat Republic happy, in order to make your customers happy, because also customers shift. That's why we see, I think that's a good point, that's why we are seeing voluntary audits in crypto exchange, say that we have this liquidity, we have these assets, and they're just showing it to the consumers to give them enough relief. And because if you don't provide this to your banking providers, you won't have many choices in terms of exchange from crypto to fiat. And when customers don't have the option, they go away. So from competitive perspective, this is already there. And I definitely agree that it's going to be tightened by the regulatory advancement, but I think not as far as you think. This is my just personal point of view on that.
Perfect. Guys, we've run out of time for this session, but they will be staying after for some drinks. If you have any others, you can definitely meet them after, and I'm sure they'd love to engage with all of you. Thank you very much.